Thank you. It's a great honor for me to be invited to this seminar. Excellent. To have a speech among so famous and qualified speakers. It's a huge challenge. It's a huge challenge also the timing I have available for this wide topic. So I decided to start with my strongest part, which is concluding thought. So I was asked to say something about actuarial view on natural catastrophes. Okay, let me put it this way. Let's be clear. A long time, the insurance industry will make definitely profit from natural catastrophes. It's maybe a sad story, but it's a good. Maybe some companies will default, but by the end of the day, the insurance industry will profit out of it. Probably I will recall you some activities regarding reinsurance renewal. If you speak with reinsurer, each year they will start negotiations with sentences like, in past year you have triggered this or that part of reinsurance contract, or they will start, it's a tough financial market, it's very hard to get capital costs, or they will start, there has been floods on Thailand, or earthquake in Chile, or earthquake in New Zealand, and they will get anything that they will charge you a higher reinsurance premium as you expected, every time. So they will do a profit. Okay, if reinsurers do a profit, and they work with natural catastrophes, so also insurers, we have to make profit, otherwise we would make losses. So where do we find actuaries in this story? This is agenda. I will, more or less, I will tackle the classical non-life reinsurance topic. It's pricing, reinsurance, reserving, maybe left capital modeling for discussion later. But first, I will also use Wikipedia, as Mr. Van Hule has. I would like just to stress not definition of catastrophe, natural catastrophe, which is probably clear to anybody, but this end of definition. Severity, which depends on affected population resilience, or ability to recover, and also on the infrastructure available. So the impact of natural disasters doesn't depend just on the mother nature, but also on the people, on the country, how is prepared on it. We have, insurance industry, we have a little adoption of this definition. In natural catastrophes must be triggered also the policies. So if we would like to have an impact, there must be insurance policies involved. And a natural catastrophe is defined as an event which triggers a huge number of policies. So it's not a problem of one single big event. It's not a big claim. It's not a huge claim. But the problem is in a number of policies. So the claims are relatively small, or let's say normal, but the problem is the number. We might have a huge phenomena that has no impact on insurance industry. I will later go to the classification. One of the catastrophes might be drought, also drought. We have a situation now, right now in Cape Town, probably you're familiar, the city is running out of the water. It's a drought. Nobody has seen drought in Sahara as a disaster because there is just a sand there. But the similar situation is in Sahara. Nobody is screaming because there are no insurance policies there. There are even not people there, just sand. But it's a similar situation, not treated as a natural catastrophe. It's something normal in Sahara. On the other side, we might have moderate events, not so huge extent, but might have a huge impact on insurance industry or even on particular insurance company. Okay. Oops. I have problems with. Okay. Okay, the types of natural disasters have, we can classify the natural catastrophes in five classes. Geological events. You might find some events that are not so familiar. Probably we know all the natural catastrophes that causes some casualties or some costs. Maybe some are a little less known, like sinkholes, but they exist. We might have also some space disasters, although I don't recall that somebody claimed for a claim from space disaster, but in geological history, there were space disasters on the Earth. We have here the list of 171 countries done by United Nations University, and it's a so-called World Risk Index for catastrophes, and it's not just exposure toward that put country on the specific space or put the index. This index is composed of 28 indicators. And one of the factor that has influence on this risk factor is also insurance industry, whether it is developed or not. You probably remember the earthquake in Nepal, 2015. It was a huge earthquake, which has a quite moderate impact on insurance industry. Why? Because in Nepal, insurance is not so developed as in the rest of the world, or the western part of the world. And Nepal is quite high on this list. We might talk, I thought that the first country, Vanuatu, it's an island country in Pacific Island. I first thought this country is disappearing due to the climate changes. It's a definite, but it's not the reason. This country is very interesting. It has mountains, it's a small country, half of the Slovenia. They have hills, but they have all thinkable disaster possible. They lay in the so-called devil ring or fire ring of earthquakes in Pacific. They are exposed towards earthquakes, towards volcano eruptions, towards tsunamis. On the other side, people there, they exhausted the woods. And they have now the problems with landslides, and they are exposed over towards man-made catastrophes, not just natural catastrophes, and they have the highest index. On the other side, I put some countries in a region. Unfortunately, Montenegro is one of the rare countries that it's not on the list. Don't ask me why, I don't know. But we might see that exposure, this is this column, is more or less quite similar towards all the countries. The difference is in this next parameters: vulnerability, susceptibility, and lack of coping capabilities. Here are also incorporated insurance systems of particular countries, and also other factors. Maybe we shall talk a little bit furthermore later. Still problem, okay. Maybe some statistics we have for each period. We have two columns. As we might see, the upper column presents the number of natural events, and the lower column presents the amount, the damage caused by these natural events. We might see that the numbers and the damage is rising, and the main driver for the rising of numbers are the green and the blue one, which are floods and storms. We can explain that with climate changes. On the other side, we might see the also amount and the ratio between amount and the number, if we see the average claim on the event, it's substantially raising. We have huge indexes in this period. Okay. Yesterday, I met with a colleague. We had a small talk. One of the topics was, she told me, she got a book of Black Swan. Do you know this book, Black Swan? It's a Black Swan theory. I recommend to read every actuary. You will like it. If you are actuary, you will like it. Written by Taleb, Nassim Taleb, something like that. Many, many, many nice examples among them. And Black Swan is about events that haven't occurred, or they will surprise us. I don't know how many of you know the natural phenomena, sleet or black ice. I know for the sleet, for this phenomena, but I never treat it as a natural catastrophe. Do you know what is it? It's a wonderful phenomena. We had it in Slovenia in 2014. It's a mixture of rain, it's a rain, falling in circumstances of temperature inversion. It's not extreme conditions, but it's a very narrow condition when it appears. So the rain, when comes to the ground, due to the temperature inversion, changes into the ice. Okay? We have wonderful pictures. We had in Slovenia in 2014. This is one of these. The sleet was affected by 1/3 of Slovenia was affected by sleet. Okay, wonderful pictures. Yesterday we also had a small talk. I come in from small village close to Ljubljana. It's 20 minutes by car. These are pictures taken in my village. It was one of a lot of villages or towns in Slovenia affected by sleet. These are the pictures. Okay, very nice. The trees were broken. Okay, but that caused almost no damage to people. Nobody was hurt. Almost nobody. Just children were forbidden to go to school for a few days. Why? Because it was dangerous to walk on the pavements due to the ice that might fall from the trees or from the roof. Ice was everywhere. Okay, what was the problem? This is picture taken 100 meters from my house. The most affected damage was, the biggest damage was on the trees. Slovenia left without forest, almost without forest. But what was the problem? You see, there was collapse on T&D lines. No electricity. I think that 15% of Slovenian population was without electricity. The problem was that it was not without electricity 2 hours. It was not without electricity 1 day. In my village, it was called Logatec, remember name? Logatec, it was 10 days. In the middle of the winter, the whole heating system depend on electricity. It was cold. I moved out of my village for 10 days at that time. This is also the picture from Logatec. It was not that 5 pillars dropped down. Everything dropped down. We were, for 2 weeks, we were in medieval period. No electricity, not just no electricity, no cables. Can you imagine that there is no signal for your mobile? No signal. Okay. Nobody planned this scenario. Okay, where are insurance companies here? We insured T&D lies. Those risks we never thought that could realize in such extent, that the whole electricity distribution system of the country would collapse. Not just collapse, but would be destroyed. Every cable has to be changed. Every cable. So this was the millions. This was just, I don't know, this picture were taken 5 minutes walk out of but it was not just from where I live, everywhere. Half of the country looked like this. And the place Logatec got a name for 2 weeks, aggregates. Do you know why? Because the whole city worked on aggregates, on electricity generators. And there was some joke that the name was changed should be changed to aggregates. Okay. What was the change when the electricity distribution system was established? A lot of cables were not anymore air cables, but put into the ground. So this is, if we go back, after this event, the vulnerability and susceptibility indexes raise up towards the same risk. But we are now aware of this risk, and we changed the system. So we put the cables into the ground. Nobody was aware of this risk. I'm sure that, okay, I will a little bit accelerate myself. Let's go. So we have to be aware that there might be a phenomena of black swan. So we have first, when we cope with the natural disaster, we have to find definition of all possible events, their impact, and the probability of these events. We see the composition of loss ratios. It's mainly the loss ratios that the insurance company in certain products has is composed of attritional losses, large losses, which are very known to insurance company, but there are also cat events, which are probably not in the databases of certain company or any company or industry. Okay, I will take the quote of Yogi Berra. I don't know, it's a famous baseball player, famous by the quotes, which were massively upgraded later by Mr. George Bush with similar funny quotes, but there are a piece of truth here. He said, in theory, there is no difference between theory and practice, but in practice there is. This is theory, what meant Yogi Berra. This is practice. If you are lucky, you will have such base. So you won't see here the cat events. In practice, every day you might see also this composition of loss ratios. It's not 1 year composition, it might be 10-year statistics that you might see it like this or like that. You have to be aware. So this is practice. You won't see the theory, okay? So we have to find the proper loss ratio of cat events. Okay, let's go to the reinsurance. The reinsurance is a solution. We have to decide which form of reinsurance. We have to decide for per-event reinsurance. So the reinsurance that covers event. We have also dilemma about proportional and non-proportional. The non-proportional version is the most suitable, but if we do not want to deal with this, if we don't want to accept this risk, we might accept for the huge proportion or the low retentions with proportional form of reinsurance. Okay? And then there is a problem how to set, how much reinsurance do we have to buy. It's a dilemma of setting priority and setting capacity. We have to model the cat events. The solution is modeling. And the model says, well, we have to decide first priority. So we decide where do we take risk. After that priority, it's taken by reinsurance company. Reinsurance company has traveled with the upper. So what might be the extent of the damage? So we also have to set the capacity of reinsurance program. And we might also decide for aggregate forms of reinsurance. That means all catastrophes in 1 year, it might happen more, let's say 2, 3 floods, 2, 3 hailstorms. And after that, the certain amount, it is also reinsured the aggregate of these events. Okay, after reinsurance, we might have also the reserving problem. We extensively use the triangulation methods. The problem of natural events is that first, they are not included in the payment patterns from the past, and if they are included, they spoil the pattern. So it's better to put them out of the patterns and take a separate valuation. What do we do? Here we have Slovenia. Here we had 2 hailstorms with the same extent, so the same amount of damage was happening here in the center of the country. Here it's a little bit out of the center. This was we had experience of 4 hailstorms in a row in a matter of few months. This was the first one, this was the last one. What happened? The payment and reporting of the claims of those 2 events were totally different. And we confused our reinsurance because after a few months we thought we know everything about this event, but it appeared that still we got additional information, so additional claims months or even years after it appeared. And we had different patterns. You see, this is the first hailstorm in 2009. It was a few months after the 3rd storm in 2008. This storm was reporting of the claims of this storm was much faster, and this storm happened in the center of the country, where we have much more workshops repairing the damage on the car, cost on the car, much more. The claims were spread all over the country because people are coming to the capital on daily basis, and they go back in their cities in the afternoon. They were affected by this event, and they repaired in their hometowns the cars. By this event, the cars were hit in one region where people stay in this region, and workshops couldn't manage to repair all the damage. And the reporting was much, much, much slower. We collect these patterns. If we have, we collect, we follow, and we compare the events among themselves. So, and based on these patterns, we put these patterns out of the regular claims and reserve separately. Okay. And for the end, I will use again Yogi Berra. I like him very much. He said, one of his quotes, also funny, "The future ain't what it used to be." It's true for insurance industry. Thank you.